Hello everyone, welcome to Blue Dragon Actual. Today's topic is inherited estate or FFA, which you can see here in this row. So this is an integral part of the participating policies, and this is also a part that everyone is kind of confused about. So what exactly is inherited estate? Now you have seen my preparation of financial statements and auditors report regulation. You can search in my YouTube channel. So that shows or that defines FFA or inherited estate as the funds whose distribution to either the policyholders or shareholders is not decided by the end of that year, right? So it means it's a funds that is kind of staying with the insurance company, but it is neither distributed to the shareholder nor distributed to the policyholder. Now we know in participating fund, policyholder are participating, right? 90% of the profit goes to, or 90% of the participating fund belongs to the policyholder, and 10% belongs to the shareholder. But this is one such fund that is kind of not distributed out. So why, first of all, why the insurance company would not distribute this? Just to ensure that in times of stress, there can be some additional support. So that's why the insurer can, like in good conditions, they would distribute less profit, and in bad conditions, they will distribute more profit to maintain that continuity. And also in bad condition, they can use that support. So it's like equivalent to capital in a non-participating fund. So capital can be used to kind of put support, like shareholder can put in money if an insurance company is going insolvent or there are too many claims, right? So FFA or inherited estate kind of does the same purpose. So it is, but it is kind of, it is called inherited because in the previous times the insurer has made some profit. Say insurer has made 200 rupees as profit, but the insurer has only distributed 180 rupees as profit. Remaining 20 rupees the insurer has retained, right? And that's retained would be used future in future to kind of pay for the bad situation or bad environment, right? So participating fund, if you, here I try to give a simple example. Participating fund, if it is entirely of 200 rupees, then asset share will be of 150 rupees, and FFA and inherited estate might be of 50 rupees. And there might be different ways to kind of distribute the inherited estate. Now from inherited estate, the money can only flow into asset share, and from asset share, the money can flow here, right? But from inherited estate directly, you cannot distribute the money to the policyholder. From inherited estate, the money should first come to the asset share and then it would be distributed. So one such situation is like if you have enough surplus, accumulate enough surplus. Suppose the inherited estate is going growing and growing. Say it is 5,000 now. You wanted to, and that can be seen as unfair distribution of profit, and the regulator kind of looks after this. So in that case, you can transfer a money to the asset share and decide on these are the policyholders who have contributed most to this 5,000 rupees surplus. So I'll distribute the money to those policyholders, right? So first, the movement of money would happen from inherited estate to the asset share, and from there it would be distributed. We call cash bonus, which you have seen in our previous video, which is distribution of surplus. Now, here in this example, you see how source is important, right? So it is in participating policies, because there is a lot of discretion. The appointed actuary or the with profits actuary for the UK, UK part. So they had to determine from which source this surplus is arising. So suppose the surplus is arising from riders, which are non-participating riders, then the surplus should be distributed among those policyholders who have purchased those riders, and it should not be distributed to all those policyholders, because then it would be unfair. Someone else would be benefiting on the expense of someone else, right? So the source is very important, the source of surplus, and it should be distributed to those policyholders. Next, I have already spoken about, when you kind of talk about inherited estate, it is to provide that investment freedom to smooth the surplus. So in bad times, put more money. In good times, they would kind of grow the estate so that it can support in the bad times. So that inherited estate, so that freedom would be there. It can also be used to, say, purchase a machinery, something like that, so that it will benefit the business in the future, right? The next is shareholder capital. Now, in very extreme situations, suppose the business is going insolvent, or you don't have money to write new business, there might be 10% of the inherited estate can be used as capital to kind of support the non-participating business as well, or to kind of write new business as well. In only extreme circumstances, usually the company would have internal policies that this should not be used, but that can be used in extreme circumstances when the company is kind of going insolvent. Under normal circumstances, should not be used, because obviously whatever in participating fund, 10% belongs to the shareholder. So in such cases, 10% can be used, but in only in extreme cases. Otherwise, it can be once again treated as unfair distribution or unfair use of the participating fund, because participating fund should benefit only the participating policyholders and should not be used by the shareholder to fund the new business train or fund writing new business. So that would be treated as unfair. So FFA or inherited estate, it is kind of inherited from the insurer past profit, and it is used to kind of benefit the policyholders or the participating fund people during situations which are not good, right? And the source is very important. From which source the surplus is originating, from to that source the surplus should be distributed, right? So thanks for watching. If you like the contents of this channel, please hit like and please subscribe. And yeah, we'll be building to the participating policies block, and there will be a master class maybe next to next weekend. And yeah, I hope you like the content. Thanks for watching.